Don't do it. So if you've been watching your stock, your 401k, you probably noticed the last couple of days it hasn't been as pretty, as comfortable of a ride as it's been for the last few years. And that's fine. That's normal. I'm not here to tell you what necessarily is going to happen next or what to expect with your stock market portfolio, but I do want to remind you that you don't want to do what your immediate reaction is telling you to do, and that is to act now, be afraid, and do something. Try to take control of a situation. And the reality is you can't control what the stock market's going to do on any given day, especially over short-term time horizons. And so really the best thing that you should be doing is sitting down, being calm, level-headed about your process and your strategy that you use for your investments, for your financial planning, and just see what, if anything, has changed actually, because a lot of times the stuff moves around. It's been moving around. It moves around every single day, and it either you take a look at it and it impacts you, or you ignore it and it doesn't really matter. And so at the end of this video, I'll tell you, just to kind of give you a reference point of where the market sits today, at least relative to recent history. And so we'll get to that part, but I want you to first focus on the things that matter most. So it's your strategy, your plan. Has that changed at all? And the way you can figure that out is by asking yourself, are your investments still for the long term? So if there was anything that you were hoping to start pulling pretty aggressively out in the near future, it's a good bet that you probably shouldn't have been investing those as aggressively anyways. Luckily, the recent pullback isn't as bad as you may be thinking, and as bad as it feels right now when you kind of look at the red numbers. So just remember, if it is long term, well, what's the probability that your investments will recover and possibly be even higher than they are today? Or if the stock market does continue to fall, what's the chances that that's going to be a temporary situation in the grand scheme of when you're actually going to need those funds and need to start drawing on your investments? Another important thing is, are you diversified? So I try to share videos, I try to share information as best as possible, but being diversified, having a plan is so much better than trying to pick individual stocks. If you were picking like an individual airline company right now, I'm sure those things are getting hammered. I don't follow individual stocks, but I can only imagine what the coronavirus is doing to airline stock right now. So if you're heavily invested in any particular area, there could be random things that come up that impact an individual company, but not the whole US economy. Obviously, now we're seeing potential impact, but these are things that are just moving all in the same direction, and it's not necessarily all gonna still be impacted the same way. So even though the stock market has been falling pretty much altogether, when things do start to bounce back, there are going to be specific companies that may be impacted by some of these events, but in the grand scheme of things, most of them are not. And so when things do eventually recover, most of these companies are still going to exist. They're still going to be around. They're still going to be profitable, and then they're going to be focused on growing again. So again, kind of have to think long term. You can't be thinking about tonight, tomorrow, or even the next month, or even next year. So you want to have a long-term time perspective for those long-term investments. And so another important question is, other than maybe the stress that you're allowing it to have and impact your life, like, does this temporary loss in value from your portfolio really impact your life today? And I'd have to argue and say, if you're able to ignore it and not get stressed out by the market movements and fluctuations that are just going to occur if you are ever invested in any type of asset that has a market that could be shifted on a daily basis. But if you're able to avoid that stress, then really it shouldn't impact you, again, as long as you're not needing these funds to live off of in the near future. So if you are, hopefully you've got a little bit of conservative side of your investments in there so that it's not going to be bounced around as heavily as someone that's highly risk oriented and trying to take a lot of risks and hoping for some higher returns as a result. But yeah, hopefully if you're diversified, these things tend to be temporary losses in your portfolio. And the only way you can make them permanent losses is if you freak out and do the wrong thing and actually push the sell button and act in fear, even though there's no real reason to do it unless you're just following everyone else and following a herd. And that's really where behavior aspects come into play when it comes to investments, and people shoot themselves in their own foot. So I told you I was going to give you a little bit of perspective as far as where this places things, and I'm looking at an example from the S&P 500. But where the S&P 500 closed today, and it's February 27th, 2020. It's at the same place that it was October 14th, 2019. So it's not like it's fallen so bad to the point where it's like, oh, we've erased years and years and years of gains. We're not at that point quite yet, and we may never get to a point where it's that bad. Things could start bouncing back here in the near future. They could keep falling though. And again, regardless of whether they keep falling, you just want to focus on what actually matters and whether or not it actually has a real impact on your life, both now and in the next couple of years. If it doesn't, if these things are long term, then I think the best thing you can do is have your plan, have your strategy, not get emotionally wrapped up in what your investments are doing. And obviously, my biggest fear of any recession for my clients is how employable are you, because you're going to have to compete at some point. Whenever a recession does occur, that means layoffs, and you're going to have to be competing against other people. So are you doing what you need to put yourself in position to compete against other people and actually get the jobs that you'll be wanting and needing during a recession? That's really my only fear. It's not about the investments. Investments can do whatever they need to do and want to do over that time cycle, as long as you don't need it in the short term. But whether or not you're employed, that does have a big impact. So that's really what matters. So don't stress out about the investments. Focus on investing in yourself, and so that you're able to ride out any crazy hiring freeze or unemployment type situation. And obviously planning helps too, with putting some money into savings accounts, building up emergency savings, and just paying off debt too. So all these different things are going to help you, make you feel more confident regardless of what your investments are doing. So hopefully that kind of wide range of information I just provided will give you some confidence moving forward, and hopefully relieve a little bit of the stress and tension that you may feel if your blood kind of starts boiling and you start to sweat thinking about what just happened to your investments over the last few days. And I'm here to tell you, just relax. It's not a big deal, as long as you've kind of fall into some of the things that I mentioned, where you have a plan and you have a strategy, and all these things are going to be long-term investments for you. Well, then at the end of the day, this may even be a good thing for you. So if you're still putting into a 401k, you're still investing, as the market falls, you actually purchase more shares. So it's like they're on sale. So I'll leave you with that last little tidbit there.